welcome to this special edition of Smart Markets. I'm Taneia, Bhardwaj, and joining me on the show is every evening, of course, Ajay, my co-anchor right here. Over the next 30 minutes, we're going to look back at the 3 years of the Modi government, what they've meant for the market and whether or not the Modi premium, as we like to call it, will continue to prevail for equities. We'll start, of course, with today's action, where the street, let's just say, gave a 21-gun salute to the government's 3-year anniversary. The Sensex today, well, crossing into uncharted territory, ending above 31,000 for the first time ever. Well, the Nifty also did cruise past 9,600 intraday, but ended the session just a shade below it. Today's strength came from metal stocks that clearly added to the gleam, with stocks like Hindalco, Tata Steel, Vedanta all notching up some handsome gains. Private banks and FMCG companies also continuing to see traction, but it was IT, pharma and actually PSU banks that did cave in to a fair amount of pressure. There's just no stopping, Ajay, this rip-roar rally. And if you were to just step back and take stock of the last 3 years gone by, well, there've been some crazy money making.
Well, that's correct. The believers and the bulls who bought the dips for the last not only couple of days or weeks, but for the last month, couple of months and quarters, have genuinely made a lot of money. Let's talk about the last 2 days. Massive up move on the back of, first on the expiry day, the shorts covered. The weak bears came and covered the shorts, but today it was the strong bears also which couldn't really hold on to their short position, and they were bleeding money, came and covered their position, and that was the reason that we darted towards the 9,600 mark and took it out effortlessly. Sensex to 31,000 conquered, and today's up move was backed by a humongous amount of liquidity. Almost 1,100 crore coming in from the DIIs. We've always doubting them that the liquidity sitting on the cash, would they come and make the dips shallower? That's exactly how it played out, whereas FII selling was hardly 200-300 points or crores, I would say. So clearly it again proved the point that buy on dips should be the ideal strategy for positional traders as well as for investors. Talking of the last 3 years, well, we have chronicled that in the last 3 years people started doubting the Modi premium. Has it vanished? All of that after the 2013 rally petered off 1.5 years back. But again, it regained sheen. Flows came back from the domestic guys, from the FIIs, and of course, this last 2 quarters earnings is also actually not that bad. So that's what the makings of a bull run is, and we'll discuss all the elements of it and question it and analyze it. The work done so far, because stable government clearly is clearly a kind of wind in the sails of a bull market. So let's get our discussion going, Taneia.
Oh, absolutely. And then let's introduce our guest for the evening. Joining in on the show, Basant Maheshwari, of course, author and portfolio manager. Janmejaya Sinha of BCG joins in all the way from Tokyo. And from here in Mumbai, we've got Dhanpal, Jhaveri of Everstone Private Equity. Gentlemen, all three of you, thank you so much for taking time out for us. Mr. Maheshwari, let's begin with you. Modi government finishing 3 years in office, and markets clearly giving a 21-gun salute to the government on its anniversary. It's almost like one day and you've got another record high. What are you making of the way we've moved up so soon, so fast?
Hi, good to be with you again. I think it's more than a Modi rally. There's a very selective rally in the market. Of course, it looks like everything is going up because small and mid caps are rallying hard. But the strange thing about markets is, it's easy to make money in large caps. It's tough to make money in large caps, but easy to retain. And it's easy to make money in mid and small caps, but tough to retain. So all investors have to take their call whether they want to make the money and retain it also. So times like these come in the market, but what we've seen over the last 15-20 years, wherever there has been a bull run, there has been 1 or 2 sectors that really lead the run. So like I always keep talking about this IT theory in the year 2000, and then we had the real estate and the infrastructure segments in 2003 to 2008, and then we had the pharma rally and the high quality consumer names and the high ROE names from 2009 to 2015. So I think based on that empirical evidence, this rally is being led by select sectors, and those sectors are there for everyone to see. But along with them, the small and mid caps keep rallying. But the point with most investors is, if you are buying those 300, 400, 500,000 crore market caps, is it's not how much money you're making today, it's how much money you'll be actually able to retain when this market ends. It's not ending right now, but we have to keep evaluating that all the time. So I think based on that, it's a predefined segment-led bull run, and obviously, if your neighbor becomes very rich, then what he does, he just invites you for a meal every day. So the main segment, the leading bull market segment, that's seeing a lot of inflow, that's doing well, and then the other guys participate in the rally. So I think that's what's happening right now.
Right. Let's shift focus and get the Boston Consulting Group's view on it. Mr. Sinha, the reform process taken in the last 3 years, the policies, some questioned, some in fact found a lot of criticism. But net, if one were to analyze the work done so far in office by various ministries, what direction are they moving in? What does your analysis say?
Look, the areas, just now actually what is required is continued execution. Not, this new area. Look, I would like to see some more labor reform, but if you look at the textile policy, the origins of labor reform have already been seen. GST will take about 2 years to settle, but it's a massive reform. It's a massive reform and it's finally gone through. And most of the things are between the 12 and 18%. So that's actually a very good movement. I would say, if you look at, in a sense, the government, especially the Prime Minister, is bringing back a sense of sacrifice. What has happened is when you ask people, return your subsidy, that is providing some sense of sacrifice. That is like Gandhi used to ask. Gandhi would ask for people to sacrifice and join the, the independence movement, the struggle, independence struggle. And if you really look, after the tsunami in Japan in 2011, the government said, please consume 30% less electricity. And the population consumed 30% less electricity. If that was to happen in India, people would have consumed more electricity because they would said, oh my God, there's going to be cuts, so let's actually consume more. How do you bring in that sense of sacrifice? And even when you did demonetization, a lot of people were hurt. But tell me, how did you see any riots? Did you see any bunds? You did not. So there was a popular alignment with the cause, which is quite important. So I think, the creating that is quite important. And, we have to keep then moving forward. We have to move forward on infrastructure. There's no doubt about it. We have to move forward with cities. We have to move forward with water. We have to move forward, with some of the tax and then, I think labor reform needs to come at some point. But you can see the first part of it already in the textile policy. And of course, I'm saying there is a lot which is being done. Sometimes some of this will bear fruit a bit later, because some of these are long-term measures and they take a little bit of time to settle in. When we say we are all excited about GST, but in the next couple of years, there will be, settling in problems, which will be difficult. But, it would be foolish to say, therefore, GST is bad. GST is very good, but it will take 2 years to settle. It's a massive reform. And it's not easy.
Not easy, and it's not been easy. But net, the fruits are now being enjoyed by at least the markets, I can say. Mr. Maheshwari, as a market participant, view, how are you analyzing the reforms? How is market analyzing the work done so far? If one were to talk about various sectors, oil and gas stocks got re-rated because of DBT, power roads started seeing order flows. What are the other areas? How is market analyzing the work done so far?
I have visited just one election rally in my whole life, and that was when Mr. Modi came to Calcutta about 3 years back. So, but let me tell you, there are only two work which appears to be done by the government right now. First is they've attacked corruption at all ends. They've removed it how much was possible. And second was they've just hit inflation below the belt. So these two things. Apart from that, the other things, they're progressing well, but I think the results would come over the next term. So it's very important for the Modi government to actually come in power for after 2019, because that's when we will really reap the benefits of what they've done this time. But by now they've just been setting the foundation. When you play a test match, you spend the first hour finishing off the new ball, and then you look at the lunch and you look at the scoreboard and you say, okay, let's play for a little more with less aggression. So I think they've just kind of had a good feel of what's going around. On the ground, the results will now appear to come, and it will be because of one or two steps that these people have taken. But I think there's still some time to actually go and say, we are going back to 10% growth and all that is happening. But it might happen, but not immediately.
Right. Let's bring Mr. Jhaveri into this discussion as well. Would you agree that 3 years on, if you were to sort of evaluate the Modi government's tenure, it's reforms, reforms and reforms all the way?
Thank you, Tanya. Very good evening. I would like to summarize the last 3 years of the Modi government in one word, which is reform. I think the investment and the business community clearly has seen significant moves made by the government in pretty much all aspects of public life to bring about reform in processes, reform in systems, and reform in the way the government engages with the people at large.
Mm-hmm. Right. Mr. Sinha, let's also, bring into this discussion viewpoint of what many in the market are questioning. The investment community, for example, does believe that, sure, earnings are picking up, but it isn't like, the fourth quarter has been blockbuster. The fact on the ground remains that you're really not seeing signs of a capex yet. And yet, you've seen these tall valuations now where our markets are headed. How are you rationalizing this conundrum?
Yeah, look, the thing is that the biggest problem for the corporate sector, which is in the manufacturing side, is been the bad loan problem. What it has done is that credit growth is low. And when credit growth is low, investments are obviously not happening. Investments are not happening because both sides are stuck. Many large companies are stuck with projects which, have not gone forward because of the amount of debt that they have accumulated. And let us just understand, over 4 years, between 2013 and 2017, the debt has increased 80%, just by compounding of interest rates. The same debt has grown. So unless we solve it, it keeps getting us a worse problem. And this is, this is what Einstein had said, that compound interest is the eighth wonder of the world. Though the person who understands it earns it, the person who doesn't pays. And right now, the country is paying, to be quite honest with you, because we are stuck in it, and we have to take decisive measures, and the structure to take those decisive measures is not there. The second, so I would like to see a big reform in the public sector banking.
Interesting point regarding compounding, Mr. Sinha, I would say. In fact, all those investors who have been in the market and did not come out despite what was happening in the political front have also benefited because of the compounding principle. But let's talk about the areas where compounding is likely to be more accelerated. Mr. Maheshwari, we were discussing how certain areas have been emphasized upon by this government much more than others. But if one were to talk about specific areas which should be on investor radar from here on, roads have rallied, road stocks have rallied, oil and gas has rallied, select power, fertilizer sector on expectation of reform. And now it's the turn of housing finance stocks, because housing for all seems to be the big mantra of the government. Which are the areas you think still have more juice left, in context of the work being done from the government side?
The one thing you have to understand, is stock markets, the best thing about a stock market is, it gives you money upfront. So if market foresees housing for all, or maybe housing for most of the Indians by 2022, then we'll make all the money by 2019 or 2020. We won't wait for 2022. So as you talked about the oil marketing companies or the power and the infra space, so they are doing well. That's going on track, but the stock market rewards you upfront. So one thing which we have to understand at this point is, it's a small analysis that we were doing in office, and I like doing these small tidbits every time. No stock in India has had an above average gains for more than 6 years on a CAGR basis. So if you just pick up and look, 1994 to 2000 Infosys, 2002 to 2008 Bharti Airtel, Unitech, you name it, 2009 to 2015 Pharma, Sun Pharma, Alembic and all that, no recommendations. I mean, we're just taking names like that. So 2013-14 was a real time when all these housing finance companies started. So I think they will do well. They will do well for the next 20 years, but the money will be made by 2020 or 2019 or 2021. My sense is 2019 or 2020 should be big for these guys, because like for example, as you know, we owned Page, we bought Page in 2019, sold off in 2015, so 6 years. So if you look at it on a long-term platter, you'll say over the 10 years or over 15 years, these stocks have delivered 30-35% compounded growth. But the first 6 years, you get the real meat, the real, that's called the heart of the entire thing. So that's 60%, 70%, 50% CAGR. Then I'm not saying growth stops in the 6th year. What happens is everything gets discounted. So everybody and his brother and his mother and his sister, everybody knows that this company, this sector is doing very well. So in 2019, you start discounting 2022. So I think investors have to look at this market with that perspective, that whatever gains happen, they will be front loaded. We will get it before the work finishes. Before every Indian gets in house, the investors would make a money. So I think that's the perspective to look at.
Right. Mr. Jhaveri, for a moment, just let's take a slight diversion from markets to ease of doing business. That was a big mantra of this government, and on that plank they want to really attract not only domestic business but foreign capital. What is the verdict in your view? You analyze small and large businesses, listed and unlisted businesses, and are also in touch with a lot of foreign investors. Is the business in sentiment on ground returning because of this particular policy of the government?
So one is clearly from a private equity investor's perspective, we generally look at secular growth in businesses. We look to see over a 3 to 5 year period, is there a good prospect for businesses? And one of the things that's happened over the last few years is that we have actually started seeing the business sentiment come back in a pretty strong way. There is much more work happening at the ground level. And as a result of that, the opportunity to invest capital today is far greater and generate good returns is far greater than has been in a long period of time. So in a nutshell, the investment community, we as private equity investors are very, very positive on the next several years, at least the next 5 years, and we hope to continue to put more capital to work.
Mr. Sinha, would you agree? Is that the sense you get through the course of discussions that you also have with your clients abroad?
So FDI, you can see the FDI is obvious. I mean, the FDI is at an all-time high. We are getting $45-50 billion of FDI. I think we would be the first or second highest recipient of FDI right now. When people from outside look at India, they look at it very positively. Because if you look at the macroeconomics, the GDP is growing at 7%, inflation is below 4%, and the fiscal deficit is contained. Unfortunately, I say unfortunately, the rupee has got too strong because so much FDI is coming in that the rupee is getting strengthened, which I find a little bit of a problem because our exports will fall because of that, because we are almost becoming non-competitive, with the rupee getting so strong. But the fact that FDI is going in and the macroeconomic fundamentals are strong means that the world is looking at India very favorably. There is a leadership, there is a purpose which is well articulated, and people are moving forward on it. Now, we will always find things which are not where we want it to be, but it's a continental-sized country. Where would you rather be? Would you rather be in Europe right now? Where would you rather be? We have to ask that question. And I would rather be in India. Now, the problem is in the manufacturing sector and especially in the capital goods and infrastructure sector, where there was public-private partnership. Right now, much of the spending is being done by government.
Okay, Mr. Maheshwari, let me ask you then, what is it then that the government can do to, attract more foreign investment? What is your expectation from, say, the next 2 years as far as what the market would like to see from a political economy point of view?
I think whatever they have done, even if they can just push that ahead, that would be great news for the market. For example, a house needs, I am told, 206 things. So if you push housing for all, you push cement, you put tiles, you push the electrical fitting business, and the manual labor, the guy, the unskilled labor, what does he do? All he knows is to put brick on brick, and add some cement. So, I mean, you're doing an all-round development. It's like carpet bombing the economy with employment and growth. So, I think housing is a prototype. I think these are the things that the government should do. So tomorrow if the government would try to say, let's do nuclear generation power projects, so like the previous government did. So how many guys you think would employ there? So I think what they are doing, it's phenomenal. And if they can just execute only what they have done, we don't need anything more. Of course, GST is there in the pipeline. I think we'll do pretty fine, but the rallies would be selective. I still hold that view because all bull rallies in India have been selective except for in 1992 when the entire market was rigged by Harshad Mehta. So I think that's the way to go forward.
Mr. Maheshwari, but how big a factor is a stable government for a market? How much of a push does it give to a bull market in your view?
I mean, more than a stable government, this is one government which you know that they might give you the bitter pill, but then finally these guys, they know how to run the thing. So of course the market is now discounting the government coming back after 2019. So that's a phenomenal thing to happen in India. The first time after so many years we would have back-to-back two governments. Of course we are a little early into that. So I think, and plus the policy thing, and now after these elections, I think the entire arithmetic would change for the Rajya Sabha. So we are not talking about that. So instead of trying to push a bill through different measures, I think the government would be able to get what they want to do very quickly. So I think the next 12 to 18 months could see a slew of policy reforms and changes, and all of them I think should do well for us.
Mm-hmm. Mr. Jhaveri, you have recently sealed the largest deal in the logistics space with Canada Pension Fund for almost $500 million, an option to raise it to over $1 billion. With GST, a big reform coming through, do you see how important this is a transaction for the space, for the sector, and what kind of more opportunities do you see there?
So, look, first of all, I think GST again is possibly one of the most significant and most landmark laws which has been brought into this country in the last 70 years of its existence. And the reason it is so is because it pretty much changes India from 29 markets into one common market. Having said that, I think there will be short-term challenges for businesses to adjust to GST. But like any change, I think this pain is going to be more short-lived rather than long-lived. The positive side, for businesses is clearly the ability to go and reach out to multiple markets in a much shorter framework of time. In that context, logistics is going to play a very critical role. What we are doing in Indospace, and we are obviously very delighted to partner with CPPIB, we think is going to change the way companies will basically distribute goods across the country, and in that making it much more efficient and lowering the total cost of delivering goods to consumers at large. So there is a lot of efficiency which will creep in, and that efficiency, in my view, companies will share with their customers, which overall should be beneficial for the economy because it will stimulate growth as well as drive efficiencies and competitiveness across businesses.
Mr. Sinha, let's talk about, the stock markets arguably there are worries about the valuation, but clearly the momentum continues to trump things on that front. How much of the good news, though, do you think is discounted now that, we've got a clear picture as far as the rollout of the GST is concerned? And, as Mr. Maheshwari was saying, that many of the reforms are done and it's now just about, sort of taking them forward.
See, that I must tell you, the biggest problem is that our Sensex is very, very small. It's got a few companies and it's not particularly liquid. So when you get FDI flows of $1-2 billion, the Sensex keeps moving up. And that is a function of the fact that, the FDI flows are coming in. So that becomes a bit of an issue.
Okay, fair enough. Well, we have time for one last question, and Mr. Maheshwari, I'm going to point that at you. A big boost for the market, as you said, at least twice on the show after the landslide victory in UP. Do you see some part of the market now already factoring in a second term for this government?
No, I think market is already factoring in the second term. I mean, the rally that we've seen post-UP is because we all assumed that Mr. Modi would be elected to power in 2019. If he were not being elected to power in 2019, then we are in for a rude shock. But then stock market moves ahead. I mean, after 2 years, we wouldn't talk about who is the PM, who is not, and then that's how the game is. But I think we are discounting that, and I think it looks like a fair possibility, not because of two reasons basically. One, what the government has done, and what the opposition is. They're decimated by themselves. So I think we are discounting that.
All right, gentlemen, on that note, we'll say thank you to each one of you. We really appreciate you taking time out for us on this special edition of Smart Markets. Thank you so much.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.